let's turn this money, this 35 grand, into more money. Now, I would immediately start looking around for areas in the country that 25 grand would be approximately a 25% deposit. Now, I know that I've said 25 grand there, and I'll explain that. So if I've got 35 grand and I'm going to buy a property, the chances are I'm going to spend about 2,000 to 4,000 on stamp duty. I'm going to spend about 1,000 quid on legal fees, another 1,000 quid on finance fees, like a mortgage broker, your arrangement fee, your survey, another 1,000, maybe 2,000 on that, depending on how you buy it. So you're going to be looking at a good sort of 6 or 7 grand just on fees, stamp duty, legal fees, and buying finance fees and all of that. So also, you're going to need a little bit of money left over just in case you need to do any light refurbishments as well. So therefore, I'm leaving 10 grand out of this and using 25 grand as a deposit, roughly. Now, I might be able to do something for less than that, which would be a bonus. But there's a couple of rules we need to play by here. If you're going to buy a low price property, then the mortgage lending minimum is normally about 50 grand. So that's normally the minimum loan that a lender will provide. So remember that. So if I'm going to use this as maximum numbers, then it looks like I'm going to buy a place for somewhere around 100 grand. I might get a lot less than that, of course, but if I buy a place for 100 grand, I need a deposit of 25 grand, and then I've got my legal stuff covered, my stamp duty covered, financial fees covered, and then I've got a bit of money to spend on it, do a bit of graft, get it up together, hopefully to resell. So if I do that very quickly, then I'll be able to immediately turn 35 grand into, actually, let me just step back a bit, because if you're only going to do a very light refurb, the chances are you're not going to make 30 grand profit on a property. A 30 grand profit on a property normally means you're going to do a full refurbishment. Now, I'm assuming, by the way, that you're not a builder or something like that. That kind of negates it. I'm not a builder, and this is what I would do, right? So I'm not a builder. I wouldn't go in and do all this work. I might go in and do a bit of the graft myself to try and cut back the labor costs. But generally speaking, I would go in, do a light refurbishment on a property and hope to make between around 10 to 15,000 pound in profit. Now, how would I find those properties, and how would I find those areas that would be a good demand area, a good growth area, or an area that I think would be a popular sales market? So look, you're going to need to do a bit of research on this. You go around the different pockets of the country, and I would start by identifying the major cities and look at each of those cities and see which ones have huge demand at the moment for properties in their city centres. And here's a little tip on this, right? So you find those cities that have massive demand in their city centres, and then you look just on the outskirts of those cities. Because if property prices are rocketing up in city centres, then people start looking slightly out of those city centres for accommodation or somewhere to live. So that means the outskirts then start driving up demand. But you can normally catch that wave and pick up a little bargain while that property area or that area is on the increase. Anyway, by the way, I have done a podcast on how to find growth areas, high demand areas, and how to analyze the data and find the data. So I won't go through all of that now because it is its own episode. But anyway, you've got to find an area of the country that's in high demand and is going to be a good growth area. So once you found that spot, you can then start looking for the properties. Now, you're a little bit limited on price, so you're probably not going to be investing in the south and southeast. You might be able to invest in parts of the Midlands and Wales, northeast, northwest, but you certainly won't be able to go anywhere in the bottom end of the country. So now let's just say we found a couple of growth areas and high demand areas, and we've identified a couple of rundown properties that just need a bit of TLC, light refurbishment, and you've done your due diligence. And remember, I did that episode on due diligence. That's another episode on its own, which I can't do over on this one. But you've done your due diligence, the necessities of due diligence as well. Please don't get the due diligence wrong. That's so important. I see people get it wrong so many times. But you've done your due diligence and you've identified, hey, here's, let's say 10 properties. We found 10 properties which I think are good investments. By the way, sorry if I keep slipping into telling you what to do. This is actually me. So I'm trying to tell the story of what I'm doing, but I'm also trying to teach you what you should do. So I found 10 properties, let's just say, which I think are half decent investment opportunities. I then I've done my due diligence, they all tick the boxes, and then I contact all the agents and book the viewings in, of course. So I try, now I'll make myself as available as possible because I want to get into these properties quickly. And there are loads of ways, even on Rightmove, that you can find properties that are good investments and perhaps open to lower offers. Again, go through that another time. But for now, let's just say I've found 10 properties that I think are good investment opportunities. So I booked the viewings and I'm so flexible on the viewing times. I'll get out to these viewing times whenever an agent wants me to get out to them. I go out to these viewings and I do my little checks on the property to check for any damages or any structural issues, anything I can identify. And remember, I've got my checklist. You've all seen that video. I'll go through that checklist just to make sure I'm not buying a dud. Now, out of those 10 properties, I would expect to make an offer on 8 of them. Remember my 80-20 rule. So I would expect to make an offer on 8 of those properties. And out of those 8 properties, I would expect to have 2 offers accepted. Now, here's my dilemma. And this leads on to option number 2. So let's say out of those 2 properties that I've had an offer accepted on, I buy one of them myself, of course, because I'm going to make about 15 grand profit. I expect 10 to 15 grand profit on that. However, I now have another really good property investment that has a sale agreed at a really good price. So now I can't buy both because I've only got 35 grand and I can only afford to buy one. So I go back into all the Facebook groups, all of these Facebook pages, and I start saying, hey, I need some help. I found this property. I've had an offer accepted of £80,000. It only needs a few grand spent on it. And I'm looking for either somebody who wants to buy it or somebody who wants to fund me buying it. Now, then you start giving them the correct information, i.e. the job done valuation, the work required, a schedule of works, your data for the demand, for the growth, and all of those things. You've got to give any investor or investment partner that information. Now, once you've gone into those groups and you've issued out that information, bear in mind, I don't know anyone. That was the story. I don't know anybody. You're going to get bombarded by property sourcing agents who want to then resource your sourced property. That might not be a bad thing, but you're also going to get a ton of people that are phony, that want to pretend that they're going to invest in your property. So you will get contacted though, because what you're doing is offering people an opportunity to make some profit, and everybody loves profit. So now I'm moving on to option number 2, which is so bear in mind, I've put this first one. That's my first property done. That is going to generate me 15 grand. It's going to turn my 35 grand into 50 grand. And now we're talking. Now I can start buying a buy-to-let property and doing another flip. I probably should have wrapped that up first. So yeah, anyway, so I'll turn that money, that 50 grand, I'll then buy another flip, do the same thing-ish, and then try and invest the rest in a buy-to-let property.